What does that mean for BTC? Where can we go from here? Short term, we're still on the slide, obviously.
Hello everyone. When it comes to deciphering the complex world of cryptocurrency and stocks, there's no better companion than the renowned trader, Jason Pizzino. With a wealth of experience and a keen eye for market dynamics, Jason is your go-to expert for understanding and analyzing the latest trends and charts in the ever-evolving crypto and stock markets. Jason Pizzino analyzes the current stock and crypto market amid the latest Fed rate pause, inflation, recession fears, and conflicting market signals like Nvidia rise and AI boom. Welcome to our YouTube channel, your gateway to crypto, Bitcoin, and stock market success. Are you eager to unlock the secrets of financial prosperity? Look no further. Our channel is your ultimate destination for all things crypto, Bitcoin, and stock market related. From insightful analysis and expert tips to hot trends and market updates, we've got you covered. Thank you. Over the past week, Bitcoin had been holding around the $26,000 region as the market came to grips with the Securities and Exchange Commission's legal action against crypto exchange heavyweights Coinbase and Binance, as well as increasing macroeconomic uncertainty around interest rate signals from the United States Federal Reserve. The sharp drop in price arrived roughly 3 hours after the Federal Reserve announced a pause on interest rate hikes, following a 15-month-long campaign of rate increases to combat surging inflation. While the market was almost unanimously expecting a rate pause, the Federal Open Markets Committee statement hinted at further rate hikes in the future, which typically blunts investor excitement for risk assets like cryptocurrencies. Much of the positivity we've seen from risk assets this year, including Bitcoin, is built on the expectation that inflation will fall and interest rates will peak and then begin to be cut. Inflation is moving in the right direction, but the comments from Jerome Powell signify that rates could stay higher for longer, which would put Bitcoin on the back foot.
Interest rates announcements, federal funds rates. 5.25% was the forecast, that was the previous, and now that's the actual. So this is the first time that the Fed has not raised rates since January of 2022. So it's been about 18 months since the US has remained steady on those interest rates. This might be that little bit of a scare to the market that investors have been waiting for, this whole pivot scenario, this pivot bearish narrative that when the Fed finally pivots, the markets collapse. But like we've covered before, this is absolutely untrue. Not my opinion, it's the facts on the charts. The markets can remain in high territory at high prices, increasing at prices when the Fed pauses, or even if they decide to drop interest rates and then later increase the interest rates. We have seen this happen before. This has happened through 2004, 2005, 2006, pause, all through 2007 until we got to the peak in the market, and then the market started to come down. So one might say, well, the interest rates came down and the market started to collapse. In the mid-90s, we had interest rates going up, down, sideways, increases again, yet the stock market continued to go up. There are plenty of other examples in history that show this as well. We've covered it on the channel, so I don't need to repeat it here, but that narrative of once the Fed pauses and drops interest rates, the markets must collapse, is totally untrue. It does not happen every single time. That is the data itself. The bulk of the moves to the upside, and might even be an early warning sign for BTC. The NASDAQ is currently less than 11% away from a new all-time high. It was only a few months ago, October of 2022, where it hit its cycle low. We had the recession fears down there. The markets looked like they wanted to collapse further, or at least that was the fears due to recessions and interest rate rises and every other bearish narrative, yet we now see it pushing to fresh highs. So again, this morning, we've seen a new highest close for 2023 for the S&P, a new daily high for the S&P 500, new highest close for the NASDAQ, a new daily high for the NASDAQ, and for Germany, someone better tell them that they are in a recession because it hit a new all-time high, a new highest closing price. If that's what a recession means in 2023 or 2024, you better look out. Looks like these stock markets want to hit new all-time highs, even with a recession. So don't let those narratives fear you out again. It is becoming almost a joke when it comes to the recession calls, that sort of stuff. Germany, someone tell them please, they hit a new all-time high on their stock market. But it looks like the markets are coming towards a turning point. We're following up on the VIX, the volatility index. This thing has bottomed, had a little bounce away and coming back down again. There will be a pullback. We're expecting a pullback. We're expecting a healthy correction for the stock markets, S&P, NASDAQ, your local stock market, wherever you are around the world. But right now, these are obviously the biggest markets. This is what we're following, and that's the reason why. S&P, like we saw, new highest daily close. This is all still on trend for a new all-time high in the coming months to years. We're not getting too far ahead of ourselves. We are just following the charts, looking at the facts, the data that is getting printed day in and day out. Markets are now taking out previous resistance levels like we saw from August of 2022. The market is shooting up. So this is getting a little bit fast, a little bit too much for our liking. But remember, markets can remain irrational longer than you or I can remain solvent. Don't fight the trend. At the moment, the narrative is correction and depression and collapse. It's getting less and less, but nonetheless, that is still the narrative, the facts, the data, the chart, what's going on day to day, what the investors are doing, the traders, they are buying up this market. So I'm not expecting the market to break down any key significant levels. S&P 500, I'm going to stick my neck out here on a huge ledge and say it's not going to go below 3,800 points. That's not going to happen. We've looked at that. If I wanted to stick it out even further, some might even say my nose could reach the end of that ledge. We'll let that joke slide. Essentially 4,000-ish points. I probably would say that this market, S&P, probably, okay, won't see under 4,000 points in this cycle again. We've seen it, tested it multiple times, seen it get rejected. That one there is just for a bit of a fun of it, but I'm pretty much sticking to this one here. 3,800 points, market's not coming back to that until whatever happens in the next cycle. We'll wait and see. But for now, this thing looks like it's heading up. Same sort of deal for the NASDAQ. We have come up to this resistance point, a nice key area in the market. It's at a key resistance level. This could be a turning point for the NASDAQ. It's back up at 15,200. It was only a few days ago where we have been waiting for this market to hit around 15,000 points for the first time since April of 2022, so over 12 months ago, and it's done it. So the NASDAQ looking very, very strong. I'm putting a lot of emphasis on this because the question of the video is, should we be concerned about Bitcoin's crash? Bitcoin's drop to the downside. Bitcoin's 3% down day. And the point here is that these markets are all in very much bullish territory, although there will be corrections. There has to be corrections. There's got to be healthy corrections here. So the key thing is when we get the corrections, just look back to the key support levels that have occurred in the market. We have our 50% level here, which also was some support, some resistance, support again before the market really bounced away for this last few weeks from the move from mid 13,000s to now over 15,000 points on the NASDAQ. And yes, it's being held up by only a few stocks. That isn't the point. The point is the market is up and the market is going very strong. So sticking my neck out again here, let's say this low right here. This is a key low, probably not going to see under 12,800 points again in this cycle, but I like this one much better. I doubt we're going to see underneath 12,000 points. So basically 11,800. NASDAQ's not going to come back down to that point in this cycle. And if it did fall back down past that key support level, this would churn for a very long time, probably months. We'll see. We'll wait and see if it's years. But nonetheless, this market is still up nice and strong. Same deal like we looked at for just quickly on the German market. This, so you can see it with your own very eyes, a new all-time high price, 16,336. The previous all-time high price was last month, a month ago, 16,332. So 4 points higher, and it's the highest close in history. Remember, Germany announced a recession back at the end of May when it hit 2 negative quarters of GDP growth. It hit an all-time high prices today. So The recession fears, this is one for the playbook. If we see a recession in the US, I'm probably not going to be too concerned. It seems like this is the time in the market where investors are getting back into that risk appetite. So what does that mean for BTC? Where can we go from here? Short term, we're still on the slide, obviously. That's the short term there. Top was April, 2 months now. We are down to a new fresh low for this period, 24,800. I will admit, this has gone a little further than I would like, than I'm comfortable with. However, many times before, we've been looking at a key support level back here, 23,900, and I've been calling it 24,000, just for a round number for the videos. The reason being is we see some resistance, and we've seen it used as support on the way out. So that's a key level that we're looking at. Now, this 50%, we've closed under it for 1 day. Potentially, we have a couple more days here, and then a move to the upside would then cancel any sort of look to the downside. We need to see higher highs, higher lows form. You can see our swing chart is still well and truly down. We want to see the swing start to get back up, form some higher highs and higher lows for the bulls. For the bears, they definitely want to see it get rejected here at 25.3 to test further downside. So if that's the case, then this 50% level, no longer. We get rid of that. We move it back to the next key support level, and that was the cycle low. So 50% now would then become 23,255. So a few $100, several $100 lower actually than our key level here that we're looking at for 23.9. So about $650 if you want to be precise on that. So we're looking in that zone for the next support in this short-term downtrend before we could potentially see a reversal.
So, if you're ready to navigate the exciting world of crypto, Bitcoin, and stocks, hit that subscribe button now. Join us on this exhilarating adventure towards financial growth and success. Don't miss out, subscribe, like, and share today. Thanks.